Welcome to the deep dive. Today we're taking a closer look at Unusual Machines, Inc. That's ticker UMAC.K.
Right.
And our mission really is to figure out why this U.S. tech firm is trying to become, well, a key part of America's drone industrial base.
Yeah, and specifically the component side of things, not just the finished drone.
Exactly. It's a huge question, billions of dollars potentially, especially with everything going on geopolitically.
Well, what's really interesting, I think, is how UMA's story isn't just standard company growth. It's really plugged into this national strategic need.
You mean things like the legislation?
Precisely.
Yeah.
You've got the American Securities Drone Act, the NDAA, the National Defense Authorization Act. They're basically carving out a protected market for domestic suppliers.
So their growth is almost underwritten by policy.
In a way, yes. It's tied directly to U.S. industrial strategy. It's as much about geopolitics as it is about, say, tech investing.
Okay, so let's talk about how fast they've moved. This idea of blitzscaling. It hasn't been slow, has it?
Not at all. Explosive is a good word. I mean, look, they had their IPO, their initial public offering, February 2024.
Right.
And immediately, boom, they acquire Fat Shark and Rotor Riot from RCAT Holdings.
And these aren't small names in that world.
No way. Fat Shark is like the name in FPV goggles, first-person view.
They dominate that market, don't they?
Reports say something like 85% market share among the pro drone racers. So huge credibility, known for quality.
And Rotor Riot.
That's the other piece. It's a major e-commerce site, but also like a cultural center for the FPV scene. Huge YouTube following, over 284,000 subscribers last I checked.
So it's a built-in marketing arm and sales channel.
Exactly. It's this powerful loop. They make the gear with Fat Shark, sell it, and build community through Rotor Riot. It's smart. Like if Nike owned the factory and the biggest running club forum.
Okay, but then things shifted a bit, right? June 2025, that seemed like a sharp turn.
Yeah, that was pretty telling. They were lined up to buy a software company, Aloft Technologies.
Yeah.
And they just terminated the deal, pulled the plug.
And instead
Immediately pivoted and bought Rotor Lab, an Australian company, for about $7 million.
And Rotor Lab makes drone motors.
High-performance drone motors,
Okay.
yeah. So dropping software, doubling down on critical hardware, that tells you a lot about their focus.
It screams hardware is king for their strategy. Becoming the Intel inside for drones, maybe?
That seems to be the play, not just a slogan, but a strategic goal. Owning the core components, the motors, the optics maybe down the line. Things essential for American drones, especially for government and defense use.
And they're putting money behind it. Big money.
Oh, yeah. That $40 million public offering back in May 2025.
Right.
That's earmarked specifically for building out a new factory, 17,000 square feet in Orlando, Florida.
For making those motors domestically, onshoring.
Exactly. They're targeting, I think, September 2025 to get it operational. And the goal is ambitious, over 50,000 high-performance NDAA-compliant brushless motors per month.
Wow. Okay, so that's the physical commitment to bringing this supply chain home.
It is. It's making that strategy concrete.
So let's summarize the value proposition here. UMSC wants to be the go-to, reliable, vertically integrated U.S. supplier for these key drone parts, compliant with regulations like an NDAA.
All right. Serving everyone from the FPV hobbyists they already reach up to enterprise, government, and defense customers.
It's an aggressive plan. What's the biggest risk? I mean, building all that capacity, integrating everything, it sounds tough.
Execution. That's the absolute core challenge. Can they actually build that factory on time? Can they hit those production numbers, 50,000 motors a month? Can they do it efficiently and maintain quality?
Manufacturing is hard.
It really is. Especially scaling up complex components like high-performance motors, getting the talent, managing the supply chain for their own components. It's a massive operational lift.
So wrapping up the key takeaways, Unusual Machines looks like a very focused bet, a bet on this big trend of onshoring critical tech supply chains in the U.S.
Yeah, a concentrated bet. They've snapped up these different pieces, goggles, e-commerce, now motors, to build this vertical integration. And they're spending heavily to make it real.
From an investment angle, then, what does it look like?
Well, based on this, it fits the mold of a high-risk, high-reward stock. Speculative growth. You're betting entirely on future expansion and grabbing market share.
Accepting losses now for potential dominance later.
Exactly. Significant cash burn is likely for a while. And, success isn't guaranteed at all. It really comes down to two things.
Management execution.
Yep. Turning the strategy into a profitable, scaled operation. And second,
Policy.
the persistence of U.S. policy.
Mm.
Will the government keep enforcing rules like the NDAA that favor domestic suppliers over, say, Chinese competitors? That policy environment is crucial for them.
Right. Makes sense. So a final thought to leave people with, as we watch companies like Unusual Machines pop up, what does it really signify?
Yeah, what does it mean for national security, for tech leadership, when the supply chain for these tiny, crucial components becomes a major geopolitical arena?
Something to think about. Thanks for joining us on this deep dive.